This trade wasn't profitable because I found some magic entry. It was profitable because the market showed me who was trapped. The entry was just the execution. The real edge comes from reading the story the market was telling before I ever clicked buy. What's up? What's up? What's up, everyone? Welcome back to another Squatch Trades. All right, so let's get here into the charts. This is what we need to do. We need to do 5 things. We need to know what's our bias, where's the draw on liquidity or the target we're looking to trade to, who's getting trapped, where do I enter and where do I exit. This is it. But entering, because this is always the main question about where do I enter? We don't know where we're entering until we've identified these other pieces. So number one, let's see this scenario here. We're clearly moving bearish. We're inducing sellers, we're taking out lows, we're moving bearish. What we see here is we have the build up, we put in the high, we put in the liquidity block, which is the sweep of liquidity from the left, and then continuing down bearish. So we want to always see this. We want to see the build up, we want to see liquidity block put in, we want to see a continuation, a build up of liquidity below the high. That is liquidity block. And then as soon as the high after the liquidity block, as soon as it is taken out, inducing sellers, trapping sellers, this is where we're entering the trade, just as you see right here. So build up, liquidity block, build up below liquidity block, sweep the liquidity below the liquidity block, enter the trade. So this is all we're looking for. So inducing sellers, trapping sellers, continuing. Okay, that's what we're doing. So this is right where I opened the chart whenever I got yesterday, what is there say? Monday after work. As you can see, this is Monday, July 20th. I got into the charts right here. Actually, let's back it up a little bit. It's about 620. Okay. And so what I immediately saw was we put in some highs over here, taking highs from the left and continuing down, which is exactly what we look for. We've got this, we put in the liquidity block here, but because I'm on the 1 minute chart, this is actually where I looked to take a trade. What do we see? We've had sellers induced, we've taken out some highs from the left, then we continue down. We put in a low, high, lower low, higher high. If we zoom in, you can see that clearly here. So low to high, low to high. This high swept liquidity from the left. Now put in the liquidity block. So now what we want to see after the liquidity block, we want to see price sell off, build liquidity. Then as soon as this right here, as you can see, we've got this high here. But as soon as this high right here, which is the high after the liquidity block, which is the liquidity blocks here, this is the next high. As you can see, just draw your line over from the high. As soon as that high gets taken out, we're entering the trade. This one right here. So that was the trade idea. Our seller's trap. We look to be taking the short as soon as we tap the zone. Stop loss above. Target your target. So I went with right about a 3R trade. So let's play price action out a bit. Let's see what we get. So right there is where the tap is. I traded. That is where we would have got tapped in right there at the tap. And then we can play price out. Fiddled around a little bit. And delivered to target. All right, so let's recap the rules here. So step 1 is market biased. We were clearly in a bearish market structure currently, so we know we're going shorts. The draw on liquidity is in this scenario Our draw on liquidity is going to be these lows here, because we know that those are the lows. With sellers induced, we're looking to take the lows. Who's getting trapped? We have sellers induced, so we know that we're looking to trap sellers to take the short. We enter at the tap of the seller's trap, and we exit either at 2R minimum, or we can take it down to the lows. That's really it. Same repeatable process again and again. Want to keep this super simple, very mechanical. There's no emotions involved in this trading. You create patience. As long as you're not entering too early, it does work out more times than not. Obviously, not all trades will work, but that is what we want to do. Find the market biased, find your draw on liquidity, identify the trap, execute that trap, and then exit with a purpose. Forget the emotions. So that's what this framework really teaches. You know, we're teaching decision making. We're not teaching entries, right? So every step answers one question: which side? Where's price going to? Who is getting trapped? When is the market going to confirm that entry? And where does the idea end? It's incredibly simple. So that's what we're looking to do. But before you go, one thing I don't want you to forget, and it's that this trade wasn't profitable because I found some magic entry. It was profitable because the market showed me who was trapped. The entry was just the execution. The real edge comes from reading the story the market was telling before I ever clicked buy or sell in this situation. But that's what the trap framework is all about. I don't care whether this trade makes $50 or $5,000. What matters is whether I can recognize this exact setup again tomorrow, because that's what builds consistency. So I'd love to hear from you. I mean, did you notice the seller's trap before the entry, or did you only see it after I pointed it out? Let me know down in the comments. And if you're serious about becoming a more patient, disciplined trader, hit subscribe. Every week, we're breaking down real trades, real lessons using the trap framework. So until next time, stay patient, hunt that trap.